that's that. I want to start introducing our panelists and get into the event. So I'd love to have Ben kick things off, and we'll kind of go down the line. I think it's going to be good to start with, obviously who you are, your background, how you got into investing, and a little bit just about yourself, and then we can move over to Maya, Tina, and then Michael.
Thank you, Michael. Congrats on your venture here with Entre. Cool features. Excited to check it out. Thanks everyone for joining this evening, or whatever time it is where you're calling from. This hopefully will be interesting and informative, so appreciate you jumping into this event. My name is Ben Zises. I am a full-time angel investor, soon to be a fund manager. Kind of got into angel investing originally as a founder, somewhat of a failed founder, and I wear that badge with pride. So I can very much relate to many of the situations that a founder goes through. So I had a real estate, a prop tech startup many years ago, and really went through the full founder startup journey and life cycle, all the way from sort of leaving a stable job, raising several $1 million from 30, 40, 50 friends, family, seed funds, you name it. I like to say that I made every mistake that you can make, but I would say that we all know that life is just never-ending mistakes. But certainly I made a lot of them, and those mistakes, I believe, I'm almost fortunate to some extent. I'm 35 years old to have gotten them out of the way early, and hopefully help sort of not make the same mistakes twice. But my startup, after 4+ years, it was a software company similar to Zillow, but instead of searching for homes or apartments, it was searching for retail space. The concept is not so important, but as that business was coming to a close, a little bit of serendipity, I ended up at a house party. Just as a founder, I think all of us are paying attention to what's happening in the startup landscape, and my ear was just very much to the ground with the latest and greatest. And I ended up meeting a guy who knew about a toothbrush subscription company that was similar to Dollar Shave Club, in the sense of direct to consumer, beautiful design, subscription concept for an everyday, personal care item. And ended up, long story short, meeting the founders of what would become the company called Quip. And given my background and experience in fundraising and writing pitch decks and pitching investors, at the time I took a big risk. I gave them a check for $10,000, and I told them that I would love to be their first investor, help them raise their first $1 million, and ultimately turn out to be potentially bigger than Dollar Shave Club. And that experience has been tremendous. And I'm sort of living through their success, because my startup could not get to a Series A round of funding. And Quip is certainly past that stage and well beyond, if you are familiar with them. And so I kind of fell into angel investing. That was in 2014, actually, when I made that first angel investment. Probably spent a few years just not making any other investments, and just sort of watching them, helping them, learning with them. And as that business started to show some incredible growth and signs of success, it gave me a confidence to make other angel investments. And so really over the last, I would say 2 or 3 years, I've ramped it up. And listen, a lot of people like to invest in tons of different things, stocks being one of many. And I'm sure Maya can talk about that, given her background in fintech and all those things. But I love, I ended up just any money I could save, $5,000, $10,000 into startups personally. Even though now I run a syndicate, I started making investments in syndicates myself. It's a very accessible way to put small bets out there. And so, yeah, I've had just an incredible fortune of working with some amazing companies. My focus is very disciplined consumer product companies, given my niche with some of the success I've had, or with some of those companies, and then real estate, given that's been my background up until this point. So I will stop there. I've made about 15 or 20 angel investments. You can see them all on my website, superangel.vc. So that's just the brand and platform that I operate under. It's all been my own money to this point, except for some syndicates, which allows people to co-invest with me. And I'll take a break there and pass back to Mike or Maya to go on.
I thank you for sharing all that, Ben. I think it's really helpful that you went into all that detail, and I definitely want to talk about syndicates later and rolling funds, because it seems like they're all the rage now, and a lot of people are starting to roll do those. So the first question that I want to throw out is, what are you all have worked with amazing entrepreneurs, founders that have started and grown multi-million-dollar companies, if not in the hundreds of millions, and I think there's probably even a couple of billion-dollar companies that that you guys have invested in or worked at. So, what are, if there are any characteristics of these successful founders, and or the startups themselves? And this could be, probably keep it to like maybe 1 to 3 things that you've seen the founders do really, really well, and or the startups themselves they have done and executed on really, really well, that's allowed them to grow and prosper and, go from early stage or, barely off the ground to a multi-million-dollar company and help them raise money. So obviously this is more of, how can they go from the, getting an angel check to then, post angel. And I don't know, whoever wants to kick it off, we can go back over to Ben if you want to start, and then we can go down the line again if people want to just jump in.
With just to sort of answer that question. So I think, Michael, just to repeat the question, it's really like what characteristic traits do we sort of see in super successful founders? And I actually thought a lot about, I've thought a lot about this, and actually a large part of my approach in some sense is finding these similar traits from founders. And so I think the first is simply unwavering ambition to build a multi-billion-dollar company. So I think, put everything else aside for a second. We are angel investors, or we are founders or venture-backed companies to achieve an outsized end result. Okay, we're not service businesses looking to have a lifestyle business, a few $1,000,000 a year, a few $100,000 a year off the table. You take investors, you got to return their money, and you got to deliver, ridiculous returns, or at least the potential of ridiculous returns. And so truly just the drive and the ambition to get to a unicorn plus status is like table stakes. You can't just be sort of a passive person. You need to be willing to sacrifice so many things in your personal life in order to give yourself to your company. So that's the first, and just 2 others that I wrote down. I found like relentless pursuit of perfection and product obsessed. And so those are just, it is what it is, right? It's just, it is literally impossible to create a billion-dollar company. It's effectively impossible, which is why so few companies actually do it. And we all read the covers and the, TechCrunch. It feels like there's so many of these companies, but the truth is there actually aren't. And actually so many of the companies that we've even read that have reached unicorn status, it's just on paper, and certainly their valuations ultimately will not get to that point when it comes to cashing out. So it's really an impossible feat, and you do need to sacrifice and have relentless passion and product obsessed. That's just something I've found, especially in consumer product companies. And I would say I don't particularly invest in too many software businesses, but I would say similar with that. You got to make sure that code is perfect and seamless, and all of that. So the third thing I would say is the ability to learn and absorb information extremely quickly. So just to repeat, unwavering ambition to actually get to that point of building a $1 billion+ company, relentless pursuit of perfection and product obsessed, making sure your product is as close to perfect as possible. And then the ability to learn and absorb information quickly, because you got to get smart as a founder on so many things super fast. And I can obviously spend time giving examples of those things in certain companies that I've seen, but I'll stop there. Create any back and forth. But I actually would disagree with that, Michael, respectfully. I think especially at the seed stage for an angel investor, investing in the person is paramount to the company, because at the time, there certainly is no company. But also, to be honest, I think one of the biggest risks, which you very well pointed out, is the founder getting hit by a bus. And that is, truthfully, one of the biggest risks, in my opinion, to some of my early stage companies, but it's a risk that I'm willing to take. Because until a company does sort of reach that liftoff point where they have a management team and, it isn't relying on the founder's unwavering ambition to push it forward, the truth is that is a very real, valid risk. It's the hit by a bus rule. Like, no question, some of my companies, and I invest as close to day zero as possible. So first investor in Quip, first investor in Caraway, first investor, and before both of those companies were even named, first investor in a soon to be launched consumer lawn, garden, and plant care company. My risk very much is, at least in the first few years, that God forbid something happens to one of my founders. Because you're right. I mean, that is a very real risk. But at that stage, there's no way to de-risk that. I mean, it's just maybe you're talking about a later stage, or you want to hear the vision for how are you going to recruit and surround yourself with other people to de-risk the key man concept of the founder's vision. But certainly I think I am very much backing the founder first versus the company or anything else. But anyway, just food for thought in case that's an alternative take appreciated.
I want to get into the next question here. And we had someone kind of bring this up as well in the chat. What is your generally speaking, all the people on here watching this and who are going to be listening to this later on YouTube or wherever else that we're doing this, they're looking to raise money from right now or in the near future, right? So what are the things that you guys are looking for from founders? And I know we've kind of hinted on some of this from the last thing, but this is slightly different. We can get into some actual numbers and stuff, like how much revenue should people have to approach angel investors? What are the things that they need? Should they have a prototype, an MVP? Should they have some users? Should they have some customers? Should they have a wait list? What are some of the things that you guys want to see or that you've seen other angels want so that they can actually get that angel investment, right? So, and that could be anything from revenue to users, pre-orders, like I was saying. What are the things that you want to see from founders to make that angel investment?
I'll just round it out just to close the loop and give my answer as far as what do I look for. And I think, I try and learn from others. I mean, I'm very much a student of the game, so to speak. So even though these words are mine, I've certainly I try and take best practices across all things I do. And, certainly my angel investing career very much as well. And, but I certainly feel this way. So to me, it's three things that I look for. And I think a lot of, it's somewhat best practice at the very early stage. So the first is team. I'll just do the first is team, the second is market, and the third is product/traction/revenue. So team being the founder, co-founders, anyone else involved, obviously at that early stage. That's the number one. Second being the market. So it has to be a category that I feel I'm uniquely qualified to assess. And as I've already mentioned on the call, for me, this is consumer products and real estate tech. I don't pretend to be an expert in, health tech or biotech or, ed tech, and all the, even fintech. I would say, I try and just stick to areas where I have a informational or educational advantage, where, because again, if I'm not, if I don't have some competitive advantage to choosing a company, it's just not going to be I'm not going to be great at evaluating it. And so team, then the market and category. And the third, I often do not get the luxury of even being able to assess, because again, it's product traction revenue. And so my investments are often very much well before there's revenue. And so it just takes me back to step one and step two, which is back to the team and the market. And I have to go even deeper on that. And so that's kind of what I look for. But so I'll stop there.
And what I want to get into next here quickly too, before we jump into Q&A, is there's a lot of different types of, and ways that founders can raise capital, even at the earlier stages, right? So obviously the more popular route right now is safes. There's also convertible notes. I know some of you have done some syndicates, some rolling funds through AngelList. I don't know if any of you have invested in any equity crowdfunding campaigns and platforms, but I'd love to really quickly jump into, those are different types, but what do you recommend for founders? Obviously every business is different. Are there any advantages that you have for founders, or what they definitely should not do maybe is the better way? Because also I've seen some founders get into some tough situations with, early investors where they, take bad terms, give up a ton of their company, and then it can kind of screw them for later rounds and later funding. So if you have any advice on what types of, terms that, people should be looking for in the angel stage, feel free to share your own terms and or what I guess you would recommend for people. And then, some of the different types of investments that you've seen at the angel stage, whether that be safe or crowdfunding or syndicate, and how those have worked out.
Well, so syndicates don't necessarily have any impact or doesn't affect the instrument of the investment, whether it's a priced round, a safe, or a convertible note. Founders generally with their attorney, and if they don't have an attorney, I definitely have some great ones I work with and recommend. But I try and be the most founder-friendly investor on a cap table, and it starts as early as the very first point of contact. And I think a lot of founders, before they even start their business, they've been advised one way or another, or they've researched one way or another, and they have some sense of what they want to do. And I'm personally totally fine in any vehicle, and I'll take the founder's lead as far as, so I've invested priced rounds, convertible notes, safes. I've definitely come across folks that have certainly said, hey, we will not do anything but a priced round, or, as Michael was pointing out, there's 100%, there's some issues with safes relative to convertible notes, even though the intent is very much effectively to get to the same point. But I'll take the founder's lead. And then on syndicate, the syndicate is just the ability to pool together oftentimes smaller amounts of capital into one vehicle, which invests in the company on the same terms as any other investor. And so the syndicate is effective. It's just an entity like an LLC that maybe has 20 investors that are in it. And that entity signs the same instrument that any direct investor signs with the company. So my syndicates are incredible ways for me to bring more capital into deals for founders. Because if I like a deal and I'll invest 10 or 25,000, I can write a deal memo, share the deck, distribute it on AngelList to hundreds or thousands of other like-minded investors that have said, hey, I like consumer products as well. And with a few clicks of a button, they can invest as little as $1,000 alongside me. And so it's really just an amazing way to just drive more capital to deals. Currently, I have an open syndicate. $275,000 comes from 60 different people. Currently, that's very much open right now for a company that I am investing $25,000 personally into, and I'm able to bring in another $275,000 from 60 people pooled together. And from the company standpoint, they're not having to have their lawyer send a DocuSign to 60 people. Those 60 people come in as one entity on the company's cap table. They'll all vote together. They're not going to be nagging the founder for updates. They'll all effectively be managed by me. So it's just an incredible way to make angel investing accessible, but really just drive, be able for founders to be able to raise more money. Historically, it was very difficult to do without the software and the platform that AngelList has created.
So there was a question that came through on what should you look for other than money from an angel investor, right? So we're kind of flipping the, kind of turning the tables here a little bit, and obviously one of the biggest things that angels provide is the capital, right? But are there any other things that founders should look for in angel investors, right? Should they look for people who are aligned with their company and have experience in that industry or have a large network? Obviously getting, the more popular angels and, all of that can help. But, not many founders can get the likes of, some of these huge angel investors, as investors on their cap table. So what would you, what should founders look for in angel investors other than just capital?
I'll jump in here. I would say first, money is obviously it's a first and foremost, and it's a most important thing an angel investor in so many ways can do. Now, if you want to be an advisor or a consultant and provide some service, that's fine, but please don't go ahead and call yourself an angel investor. I think founders, I just don't think it's fair. If a founder's understanding is that they're having a conversation with you because you're a capital source and you've really just sort of used the term angel investor to unfairly or sort of trick someone or lure them in to you getting a business benefit out of it. I see, I think there's just maybe too many people around that do some of those things. 100%, this is not directed at anyone on this call. It's just general, something I see out there. But I also think, it's on the founder to sort of maybe do a reference check on an angel investor, because not all money is equal. Personally, I have a whole references page on my website. It's the most, something I'm most proud of, and I would direct every founder to that part of my website if they're looking for information on me. But I think not all money's equal. I think angel investors, it's just as long as you're explicit with the founder, that's most important. There's no doubt that after cash, because that's what the companies need to get going, I think among the second most important things oftentimes that an angel can do is help with bringing, recruiting and bringing in other great team members. And of course, there's the specialties of, whether it's marketing help or assistance with supply chain, manufacturing, and things like that. But the truth is, if as an angel investor, you need to dig so far, you need to spend so much time deep in those categories, the chances are it's not going to be a fantastic angel investment for you, because that's just not how it works. You need a great founder and great full-time team. So I'll stop there, but those are some of my thoughts. Comment on Scott Calick's note in the chat right there, just as far as it being a numbers game. And I would entirely agree relative to fundraising as a whole. I personally have, helped companies raise tens of millions of dollars from maybe 1,000 unique different investors and institutional investors. It's a numbers game. I mean, you want to be qualified and you want to filter and you want to be organized and really try and, limit the time it takes to fundraise. But it's certainly, especially at the early days, you just got to be out there relentlessly telling your story to as many people that have a few dollars in their pocket. So I would say, I would agree with Scott that it's very much a numbers game to have a successful fundraise, especially at the angel stage.
Yeah, I'm glad you brought that up, Ben, because I was actually going to get into that question next, and Scott's actually one of our angel investors, so he's a great person to know for everyone who's on as well, and he's been fantastic for us. But it was Lucas's question originally, which was, there's obviously so many funds, so many angels out there. They get so many decks. They get so many people hitting them up. How can I, as a founder in, whatever city, differentiate myself or get that intro and whatnot? A lot of investors have said that they only do warm intros. They only take introductions from their network. They only, take intros from previous founders. So if you don't have that network or those connections, what is the best way? And you can just go off of personal experience too. How do you guys want founders reaching out to you? And then maybe some of your angel investor friends too. How do they usually like to get reached out to? Should they just do a cold email, send a couple quick, bullet points and attach a deck? Should they hit you up on Twitter, LinkedIn? What are the best methods for founders to reach out to investors right now? And the other thing too is they can't go to any in-person events and or coffee shops or things like that. So it's all a little different now with with virtual world. So do you any I don't know if Ben, you want to add on to what you were saying earlier, and then if anyone else has anything to add on that and how they want founders reaching out to them.
Yeah, definitely. Just to add to that, and just on the point of it being a numbers game, but you obviously want to try and thread the needle, and there's resources that are just exceptional. I would just tell everyone, personally, Angel List to me, I think is really often an overlooked place. Specifically, so I actually have like a link tree that just, you can filter investors by geographic location as well as by market. And specifically, these are angel investors that have explicitly said, I am interested in deals within, fintech or B2B, media, health and wellness. It's literally angel.co/markets. Allows you to literally drill down and see specific investor individuals, their names, and see people who have, like I said, explicitly said and checked a box, they're looking for investments in this category or in this geographic location. So I think just do a little research, put together a Google sheet, target list, and treat your fundraise just like you would treat building your product, and really give it the time that it deserves. And it's an exhaustive, by the way, it's a phenomenal experience for an early founder to go through, because it's like really one of the hardest things you can possibly do. And there's no doubt that the business only starts once you've actually raised the money in so many ways. But I think it's like a good like boot camp towards what it's going to be like for the rest of your future building a startup.
I want to give you all a final chance to any final piece of advice, and then where can people follow you, learn more about you, any things that you're looking for, any things that people can help you with, or any final piece of or just thoughts to wrap up.
I'm available. Email is always best. firstname.lastname@gmail, or on Twitter. Hopefully this was helpful to everyone in the audience. Michael, congrats on Entre, and looking forward to being part of some more of these events. It was nice to chat with some of the other panelists, and you know, definitely I try and respond to every email, even if it's just to provide a few helpful links. And so again, hopefully this was helpful, and feel free to reach out to me anytime. I appreciate just patience on my response time.